So welcome back everyone. So let's continue our next episode. So right here what you are seeing here is okay, can I do this? Okay, if I do that, everything will disappear. So we don't want that to happen. So we'll use this one. So as you can see, let me zoom in on this thing. Really, I can't. Okay. Okay, let's use this one. This one, the pen. Will be good for our explanation. So this is the setup that the trade that I took on binary options. So I was testing the black box on binary options, and that's where I discovered this thing. I discovered the black box. So a little backstory. So anyways, from this price run, what do you see? I mean, when you see this one, man, trend line would have given me a good profit right there, as you can see. If I had goals, I should look at that. It could have reached the sky, but not every time, bro. Not every time. It does not work every time. So let's get back to our black box. Do you see any black box from there? Let's start from there. Yes, where? Exactly right there. There's two candles from the black box. That is a buy, I'm saying. That is a buy. Okay. And I already told you to measure the black box, the two candles. If they are anemic, you can use their wick. They will equal wicks. If they have a big candle, a big bodied candle, if they are a big bodied candle, what you're gonna do is you're gonna use their bodies. Okay, use their bodies. So what exactly happened here? Yes, anemic candles, as you can see. These are anemic. These are minute, almost like a doji, so gravestone. So what do you do now? You say, a measure from upside down there, and TP3 would be maybe around, and TP2, TP1, TP2, three upside. So TP2 is most likely hit. So anyways, we bought that thing, and look what happened. It didn't hit. We were in profit. That price was in profit. That your entry up there, you were in profit, as you can see from up there, down there. That is little bit of green blues up there, but market reversed direction almost immediately. Almost immediately reversed direction, and you wait because why? Your stop loss is down there. Don't touch nothing. So again went up, collapsed, and then went up, and then finally got you out of the trade right there as it's low. As there, they finally got you out of the trade. So that might be a loss. That might be a loss because we are waiting for our TP3 or TP2 to be hit, and then we will take partials, and we would let the other run, right? That's our step. So in this case, since TP is not hit, so our best choice is to wait, right? As you can see, reverse direction. So what do you do now? You don't do nothing. You will not sell, you will not buy. Okay, you will not sell, you will not buy. if there is a black box afterwards. Okay, this is a black box that we are interested in. So before this black box, after this black box has formed, if there is any black box here, you can take that black box as an entry. But since there is no black box here, what am I gonna do now? I am gonna use this black box as my entry right here. Okay, right here. It already showed us that 1 break, 2 further down, 3 further down, the third time it went down. So exactly right there, as soon as my stop loss is hit, I am entering a trade. Where? In opposite direction, that's a sale. And how do I measure this one? From the bodies, from the third candle or the breaking candle body to the low of the 3 candles. The lowest of the low from the 3 candles. Okay. So when I project the downside, TP1 could be here, TP2 would be down there, TP3 could be down there. Okay. Something like this. Something like this. Something like this. Okay. So as you can see, so sell right there, sell down there, right there, and then market collapsed as just like we wanted it to, right? That is not the third model. People might think that that's the third model. No, it is not. Why? Because the black box is this one, 2 up there. We traded a little bit up, but that is not didn't break the 2.5%, which means this is a black box. So price was essentially trading between the black box here, as you can see. Finally broke, as they're signifying that we are moving down. Retest, beautiful, beautiful. That's a sale. Wow, that's a sale, freaking sale. Even in binary options, that binary option, it's crazy. Don't ever try that. Not in a millennia. Don't ever do that. Okay, binary option, it is a gamble. It's just a gamble. It's gambling. You know what gambling is? You don't know. The odds are against you and everything is against you and you lose money in the long run. So don't ever try that shit. Only focus on regular trading. Okay, so normal trading like futures or forex. So what happened here? So the same thing, just like I told you, TP2 nail, take partials, TP3 nail, take partials. Now stop loss where? Down there, below your entry. After TP3, you can trade your stop loss down there. There is, unless the price wants to reverse direction, the price will not really get near your entry price. Okay, after leaving the TP3, we take profit 3. There is no business to coming down. I'm coming back up. Then we wait for another black box. Right there we get it. So what happens there? Up there. We build up, and then finally 2.5% achieved up there. That is a buy. That is a buy. Stop loss always down there. That is a buy. Right. Okay. You can abandon this doji because it is not the same as this full bodied candle. So you not only consider this one, 2, and the third. The green gap. Bam. That's a buy. That is a buy up there. Okay. 2.5% really it was nailed, I think. Yes, I think 2.5% was hit. So that's a buy. So what did the market finally do? made another black box. 1, 2, 3. A sell. Okay, a sell. Bam. If you measure the TPs, definitely TP2 is down there. I can guarantee you TP2 is down there. And TP1 up there. TP3 has never hit. Always tell you TP2 is the most important one. Okay, TP2 is down there. As you can see, you enter the sell, run down to TP2, take your partials. But unfortunately, this one didn't play out as we expected it to. Reverse direct, hit our stop loss down there. Entry, stop loss. It hit our stop loss. We entered down there too. That is entry, take profit, and then leave the stop loss up there. Don't touch it. Don't touch it unless TP3 is nailed. Don't touch it. Then what happened here? Down there. Another black box formula. Where? Another 1, 2, 3. And then we are waiting for that moment, for the break moment, for the breaking moment. Did it happen? No, it didn't. It's still trading inside this range. The range. A little bit poke, no one cares about that. That's not. 2.5% is never broken, as you can see. Then markets start accumulating more and more. Do we get the black box here? No, we don't. No, we don't. The body is below the wick. It is parallel to, it is below the body of this hammer candle right there. That's not the black box. Then what happened? Right there, something happened. Something happened. 1, the doji, the spinning top, I'm sorry, then 2, 3. As a black box. Did it break anything? No, it didn't. Then another black box formed. So we are abandoning this. When we are going forward and when new black box keep forming, we are abandoning the previous one. But we will use the previous one as a target for a target projection. If we break the upside, TP1, TP2 up 0, TP0 up 0 for this one. Okay. The previous black box will be used as a target projection if TP2 is not hit. TP2 is not it. Sorry guys. So there is no break there. There is no break there, which means we are waiting for another black box. So we got it here. 1, 2. Third one traded back down to 50% and below, even 71%. That's beautiful. And then finally supported down market. Finally, right there is a buy up there. Support, boom, smashed. So we measure from the high to the body, and then TP1 will be up there, and there, bam, TP3. Take partials at TP2, take partials at TP3. Now after this, trade your stop up at your entry and let the market run. So beautiful delivery. That is just amazing. And then when you come here, then after TP3 and after the price move a lot, you can trade it. Okay, you can trade just like this. You can trade the upside just like this. As the price moves, trail. Okay, you can use that strategy to maximize your profit. Then this black box happened right there, down there, 3 candles, bam. That's a buy up there. A buy, and then after this candle closes, you measure the TP. TP1, of course TP2 is up there. at the reversal area, TP2 is gonna be upside. Is 50% of the Fibonacci. So you can take partials in the market collapsed, and when we see that we got another black box here too. Okay, then what is the market with broken? What do? You sell just like I did here. Look, practical. I sold. I knew that is a sell opportunity. So the market now most likely is gonna top down and melt it down. Okay, melt it down and collapse. Taking out this low, and then collapse. That's what we expect. I mean, not actually here. For it to reach this one, so we might have to see a huge candle, huge black box just like this. So based on the range, the TP will be huge. Okay, the TP will be huge. So this is exactly what happened here. Okay, this is exactly what happened here. So beautiful setups. As there was a loss or a profit, but then the downside we made money. As there was a loss, we didn't make money. So I mean, yeah, still we were in profit, but as you can see, market reversed on us. Then down there, we sell. We remember, we do not trade this anymore. Why? Because we got this new one. Okay, so you do not sell below this. The market breaks down there. No, you sell up there. Based on this, the number one always focus on the new one. The new black box, focus on the new black box. So that's what you're gonna do. That's what happened. That's exactly what happened. So beautiful delivery. Bam. So this all accumulation. This all accumulation was for this nasty move, for this delivery upside. For this delivery upside. Okay. So this is just amazing. It's just amazing. So let's go to the next screenshot, and let me show you what happened. Okay. Wow, I love the. First, let's see what this is saying. It's saying third model. Third model, where exactly right. That was a black box. We dumped, as I said. Bam, we broke the upside. Third model, a buy. Bam, that is another buy down here. Bam, look at that delivery. That is ridiculous. That's crazy. That's what this one is signifying. As you can see, buy down there. I'm showing. For this black box, TP3 was nailed, as you can see, at exactly TP3. Look what the price did. That's just crazy. Let me zoom in and dissect it. So in this case, I am not using that candles black box. I mean, I am trading it, but not like not like the currently I use, not like how currently I use it. Okay, so as you can see, what do you see? Is there any black box here? No. Two candles, but the third didn't come back down, so there is no black box. When we go up, we got one here, because here, because it traded down to even the 50% is actually upside, halfway of this candle, but it traded below. Wow, that's beautiful. If it was halfway, if it was only halfway, then I do not consider this one as a black box. But traded below means it overlapped. it gave us it traded to the discount area, to the cheap area, and then closed up there. So it's a black box. So as you can see, a buy up there. That's a buy delivered. So that's a beautiful buy. And then measure from the upper to the downward. Okay. And then what do? You extend. You extend the Fibonacci. You extend the Fibonacci. Let me delete this one. Okay. You extend the Fibonacci. And then what happened? TP1. And then most likely TP2 is up there. I'm sorry, what is this? It is up there. It's up there. So the Fibonacci is 100% must be up there. And then look at from up to bottom. Actually TP2 was not nailed because the TP1 would be up there and TP2 would be up there. So TP2 was not nailed based on this. But based on this, so after the third candle has closed trading, you can actually okay, let me change this one. You can actually okay, run this. For the second candlestick, you can use the previous two candles. This one for this. Then extend it to upside because it broke the upside. So measure to the upside and then TP1 will be there, TP2 will be upside and then TP3. So really it didn't reach TP0, so which means I'm gonna wait until the third candle has finished trading. Until the third candle has finished trading. So we are not gonna sell using the third model because this is really the third model. Why? Because this is a black box. It's a black box, right? It's a black box, right? There's a shaded area. And then market traded up, breaking 2.5%. As you can see, even up, it went up. It was below, and this opened there and traded up and finally collapsed. So signifying 2.5%. So that is the certain model. Then your normal entry would be down there. Bam. But as you can see, when you measure from down there to your stop loss, which should be above, look at that range. Are you gonna risk that much money just to get only this reward? That is a negative correlation between your profit and your risk, okay? Your reward and your risk. As you can see, it became 2 to 1. 2 to 1, which means this is the risk. The risk is 2 times the reward. In the normal way, the risk should be less than the reward. The reward should be greater, right? So it is not what happened here. So when you encounter these kinds of things, I already told you to never trade them. Okay, never trade when this thing breaks down. Only use it as a directional indicator. What happens? The downside, when you measure the downside, really to TP1 and TP2 would be down there. That is why you are seeing this candle. This candle deliberately came back down and then hit TP2 right there. You can check it out for yourself. Right there. That's a deliberate attempt the price could easily have went up and never to return. It can move up without returning. But there was an unhit TP2 right there, and it will not leave that place unless that thing is satisfied. Unless TP2 is hit, it cannot go wherever it wants to go. It cannot go to the upside unless the downward direction has been fulfilled. Okay? Unless the previous black boxes TP2 has been hit, there is no going back. It cannot go anywhere. It can't. That's why you are seeing this delivery. This week is an attempt to hit this TP2 right there. Because this low didn't hit that TP2. It got close, but it didn't. It's just a rough estimation, but it could be down there. TP2 could be down there, okay? It's just a rough estimation. You can check the data. It is, as you can see, there is the date here. The date is 5 o'clock, and then 28 June 28th, which is 2024. You can check. It is pound dollar on 1 hour time frame. You can check it on trading view. Okay, going to trading view, you can check that thing out. Okay, and that's exactly what happened. You can check the Fibonacci and whether the bit was hit or not. Okay, it is a response to these black boxes. TP2 down. Exactly nailed it. Look, exactly nailed it, and then look at the reaction. Now it is time to move to the upside, because there is an undelivered TP to the upside too. So the market is seeking and seeking and destroying TP2. Okay, seeking and destroying TP2. That's what the market is doing. So that's exactly what the market is doing. It's just crazy. It's just crazy. So anyways, we entered the buy up there, and then we made a profit. Bam, look at that. That's a huge move by itself. Okay, that is a huge move by itself. Your stop loss down there, your entry up there. It is still a huge risk, but it is actually 1-to-1. So it is actually 1-to-1, close to 1-to-1 maybe. A huge profit, a little bit profit. The final, the price collapsed. Okay, price collapsed. So these kinds of things might happen. TP2 might not be hit in one direction, but it will surely be hit in the other direction, because it has to be. It is a must. So that's why you are seeing this market attempting to reach TP2 based on this measurement. When you extend the Fibonacci TP1, and then TP2 is up there. TP3 will be up there. So it got near, but collapsed down, and they changed direction. Now they are in a sell program, which means the TP2 will be fulfilled in the downward direction. So that's exactly what the market did. It went down, it moved up. We are still in this range. This is a black box. We never left anything, as you can see. I mean, I'm sorry, not up there, it's down there. It is down there. And up there. So you can see the bodies respecting. And then finally collapsed the downside. Okay, it moved it down. moved it down to TP2 right there. And the price is resting, guys. That's the price level that TP2 is found for this black box. Okay, that is just crazy. So this is 28th of June, right? On 5 o'clock. So we'll check that out when I when I'm on trading view. I'll check that out and I'll show you exactly what happened. Okay. So next, do you see any black box? Yes, well, there. 1, 2, 3. So I abandoned. So I abandoned this black box because my stop loss is very huge. The risk is very huge. So no, thank you. And then I would enter it a sell down there. Okay. And sorry, I would enter a sell down there. Stop loss up there. Okay. And then what happened? This price is collapsed. And I know for a fact that there is a TP2 and hit TP2 for this black box. And I am watching this TP2 down there too. And I have already entered in that direction. Right there I know that there is a TP2 to the downside direction. Right there showed us that this black box's direction is now in a sell program. This is already in a sell program right there. That break right there. So everything went well, bam. And when you measure from the bodies, your TP2 is down there. Most likely. TP1 will be up there. TP2 down there. Right there. As you can see, you take partials. Maybe TP3 could be down there. You take partials there too. So after that, the market, bam, it hit your stop loss. It hit your stop loss. I told you after TP3, you can trail your entry. You can trail your stop loss. This one, if it was above there, then you bring it down and put it down there, break even. And then you raise the other one. Okay, it never came back up. So you can see it fell short and traded down even more. Okay. So on the way down, the black box made another, the price made another black box. Where? 1, 2, 3. What exactly happened? Nothing. The trading inside it. Then you wait. What happened here? Tried to break, but it didn't. Tried to break, but it didn't. Because there is a 2.5% here. Okay, tried to break, but it didn't. So what happens here? Nope, we are not entering up there. Nope. Maybe up there. Maybe up there I am entering. Yes, maybe up there I am entering. So I stop loss. Same way down there. I'm already in a trade for this one, sell. I'm already in a trade for this one, a buy. Stop loss down there. So what happened here? For this one I am out of the trade with a loss. Because I didn't take partials up there. I bought that thing up there, as you can see, look at that. That huge move. I didn't take partials. Okay, I didn't take partials. Okay. Then what happened here? Stop loss. Market came down and hit it. Okay. That's a sell. That's a sell. Stop loss up there. That's a sell. As I said, I lost in this one too. Okay, and then from up there, from the body to this, I measure. Because this one is abundant. Why? Because it is not similar in shape with this one. This is bigger and huge body, bigger huge body, big one. So these are the ones that I consider, not this one. There is no 4 candles, black box, it is 2 candles. So you can see 2 candles. Then I measure the downside. TP1, TP2 most likely, and TP3 down. Okay, you take partials everywhere. TP2 and TP1, TP3. Okay, TP2 and TP3. And then what happened? So we made money, so downside we made money. We made money, it's the downside. Sorry guys, so it's getting late, that's why I am yawning like crazy. So we found another black box, bam and bam, boom. But here broke the upside, right? Stop loss down there. Hypothetically, my entry upside. Look at the stop loss and the relation. This is risky. This is very risky. This is one of the risky trades that I'll never take. I'll never take these kinds of huge swings. This is a huge swing, bro. It is nuts. I mean, I'm sorry, this one. I'm down there. So up there, that's a huge swing, and up there, not gonna happen. So I will wait for the next one. But this one has its purpose, has its own purpose, which means I will use it for a directional purpose. If it breaks to the upside, I will extend the Fibonacci upside. If it breaks the downside, I will extend the Fibonacci the downside. Okay, so what happened there? Absolute murder. Here the fourth model happened. Since we are not trading this one, but in general, what the downside, our general direction is to the downside until that upper high is broken. We are in a downtrend, which means we are moving the downside, right? So, but here, based on this, as you can see, this black box, that is a murder here. What happened here is just crazy. The force model. The force model sometimes happen. Okay, that's why we limit our risk. That is why we limit our risk. Okay. Then what happened? We broke the upside, and then we broke the downside. And then finally, we went to where we are supposed to go, because this one has already delivered here. For this one, it is done. For this one, it is done. For this one, it is done. What about for this? No, it is not. So the market is now trying to deliver for this black box, and for this one too. We are never entering a trade on this black box. Never. Because the stop loss, as you can see, from up there to my entry down there, that is not gonna happen. No thank you. No thank you, sir. So what do? I use this for directional purpose only. I measure another Fibonacci, measure it, and then okay, this is where it gets interesting. Now the market is getting interesting. I come back here and I watch for another setup. Black box format 1, 2, 3. But as always, as you can see, my stop loss must be down there, and my entry must be up there. After that, and look at the risk. It is huge. It is huge. So I can't take that risk, which means I'm abandoning this setup too. But I can use it for directional purpose. Okay. To to find where the price might stop the TP2 and TP3 where the price might reverse. Okay. And where I should take my profits off, my partials off. So not really these kinds of crazy price action, these kinds of crazy murders. This is ridiculous. What is this? This is ridiculous. So we are filtering out. We do not enter everywhere. There is no way. We are filtering out. So the sweetest setups, we are only involved in the sweetest setups. Okay. Sweetest setups. Okay. What happened here? How can I zoom in on this one? As you can see, the body is outside. This one. The body is outside this body. This kind of body. So which means there is no black box here. Okay. It simply means there is no black box here. But for this one, we got a black box. This one traded up, and then this one traded down. It is supposed to be the third model here. Okay. Right here, it is supposed to be the third model before this candle formed. But after this candle has formed, there is no third model. It is still real breakout. This is the first model. Why? Because the black box is actually this one. So it includes this week, it includes this week. So in order for us to enter a trade, we must wait for this one, for this candle, all the way trading up. So it is actually the first model. Why? Because it went straight and broke out and never returned. That's the first model. Okay. That is the first model. Then what happened here? Then we are not trading this one. Okay, I can tell you that we are not trading this one because there is a lot of huge swings, but these swings are leaving a week, which is not good for us because the risk will be high. We don't want to involve ourselves with that. Then sweet setup for it here, sweet. As you can see, 1, 2, and the third candle broke. That's a buy up there. Okay, that's a buy up there. Stop loss down there. Look at our risk. It is very small when compared to this one. From up there to down there, this risk is very small. It's actually practical. Then I enter a buy. Bam, delivery. Beautiful. Okay, from the body, steady. It's upside. As you can see. From the body's TP is upside. As you can see, TP3 is nailed most likely. So TP1, TP2, and then TP3 will be up there most likely. So that is NS. So you take partials. You take partials and then you wait for TP3, and after TP3 has been nailed, you take partials and you trade your stop to break even. Look, exactly at TP3, look. Of course, it is 100 wrong, but roughly it is TP3 is above 0. Exactly at TP3, the market moved up, and then trade down, moved away. So your entry is here, so break even means right here. Okay, break even means right here. Down there. The market ran away, bounce up, but then ran away. Okay, okay, man. Okay, all right. So this is the whole thing, the whole business here. So I said the third model here because I'm using the classical block box. The classical block box here tells you to trade the fourth models, the first, the second, and the third, and the fourth model. Uh, that's exactly what happened here. Okay, that is exactly what happened here. So trade it down, trade it up, trade it down again. So it never took your stop loss. Why? Because your stop loss is actually down there 5%. It is not 2.5% like the 2 candles black box. It is a classical black box. It is calculated. We know where to place our stop loss, and the price never takes out that is high or that low. That price level, it never is touched by the price. Just like this one, it comes near and then bam, it expands. There are trades that I made a lot of money by using this setup. Okay, the third model formed. One was on Euro Pound, Euro GBP. So exactly, I waited for the price to come down there. And my stop loss was down there and my entry was up there. It was a very minute. It was a little bit risk, but a huge profit upside. So that price just basically went up and took out the high and moved up. And that is, I don't know, maybe that could be 1 to 9, 1 to 10 risk to reward, something like that. It was something like that. It was nuts. It was nuts. So this is exactly the whole business. After that, let me zoom in a little bit and let me finish this video here. After that, price formed another black box where 1, 2, the third one traded up halfway, more than halfway, above 50% traded down, never broke, was the third candle. Did it anyways, so that's a biopsy at the 0.5%. Wow, nice delivery. That's just crazy. Nice delivery. And another black box here, 1, 2, and 3. But we never trade this one. We will use this as a directional indicator, and we know that the price is going to move a huge peep. I don't care if it's upside or if it is the downside. It is gonna move a huge peep because as you can see, that's a huge range. I say that's a huge range, just like this one. Right there was a lot of murder here. A lot of murder here being done. So this is the thing that I wanted to show you. Maybe in the next one I will. It is 15 minutes. It is just crazy. I didn't see that shit. So in the next one I will show you the rest. Okay, we have some things to see, and I'll show you, and hopefully you'll learn something, and we'll summarize this mentorship, and we'll start making money. Okay, we'll start making money. These boring videos are the one that is gonna help you, not that 5 minute video which is like blah 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 blah, this way, put your stop loss down there and where enter up there and bam, 100% return. Not gonna happen like that. So you gotta hustle. You have to get your hands dirty. That's why these videos are prepared for you. So I'll see you in the next one. Okay, so thank you for watching.